and our team analyzing that data in relation to hacks. So we have seen devastating figures in relation to the first half of this year. And we know that the first half of 2025 became one of the most devastating periods in crypto security, with over $3 billion stolen across 119 recorded incidents, which just in the time span of 6 months was larger by almost 1.5 times than the total losses recorded in all of last year, 2024, whereby the losses accounted for almost $2 billion. So, of course, the figures of this year are slightly skewed by the fact that the year began by the largest crypto hack in history, the Bybit hack, which, of course, this community is well aware of. And that in itself accounted to almost $1.5 billion. This is a visualization for you to see what's actually happening and the type of speed and risk that we are dealing with. So over $3 billion stolen just in the first half of this year, in the first 6 months, compared to the figures of last year. What we are seeing is that it's not only volumes and values of the stolen funds that are impressive. It's mostly the speed, which is also increasing significantly. So we saw that the fastest fund movement from the victim wallet was just 4 seconds. And the fastest laundering cycle between the incident itself and the funds being deposited into a VASP was 2 minutes 57 seconds, just under 3 minutes, which can be compared to funds being withdrawn from an ATM. So there is a critical time gap between the incident and the industry becoming aware of it and obviously being able to act upon it. If the funds are already in motion before the hack is publicly reported, then us investigators and compliance teams have significantly less time to act upon it and trace the funds. So we know that funds were moved faster than publicly reported. And by publicly reported, we mean the victim reporting the fact that the funds were stolen on the platforms where this can be done, to law enforcement, etc., etc. So in almost 70% of cases, funds were already moved to the next hop from the attacker's wallet before the victim reported the hack. The laundering itself was completed, and by completed we mean reaching a VASP or a DeFi platform where it can be off-ramped. So in 22%, almost 23% of cases, the laundering was complete before anybody was aware of the hack publicly. The laundering was complete within 24 hours of the incident in almost a third of cases, 31% of cases, and the funds were moved immediately in 10% of cases. In the minority of cases, the funds were deposited into a VASP directly within from the victim's wallet. It was 2.5% of cases. So a lot of you, I'm aware that the audience is partly represented by the centralized exchanges, and unfortunately, centralized exchanges are still the primary target of the attacks, of the hacks, being the largest single points of failure. So we know that in over 54% of cases, the target was a centralized exchange. The second most popular target was a token. The third one was a personal wallet. So let's speak about the main incident types. How is the crypto stolen? And of course, again, these numbers are slightly skewed by the Bybit hack, which was an unprecedented amount of crypto stolen. So malicious approvals accounted for almost half of cases. And by malicious approvals, we mean the multi-sig approval process being hacked. And to be fair to the Bybit team and to the exchange itself, there were robust controls in place in the company, whereby a withdrawal had to be signed off by a number of parties within the firm, including the most senior level. However, the hack was so robust that it still happened. The next most popular type of compromise was a private key compromise. Then it goes rug pull, contract exploit, and then some minor other cases. So this is the visualization for you. Contract exploits were the most popular type of attack, but they accounted for a minority of funds being stolen, just under 400,000 million. Private key compromises is amounted to 650 million. And then, of course, malicious approval, the Bybit hack, rug pull, and then undisclosed other cases. So, spoken about the incident types. Again, this is, I'm not sure what happened there. Probably clicked. Oh, sorry, I clicked back. So we spoke about the predicate offense of stolen crypto. Let's now talk about the main money laundering types. How is then that crypto laundered? So what we know, and of course, most of it is not news to you as professionals, but what we need to be aware of is that chain hopping or bridges is something that currently does not have a significantly bad reputation across our industry, but it is significantly used for money laundering, especially for laundering of stolen crypto. So in most cases that we have analyzed, bridges were used. Another type of laundering or something that we need to be aware of as a typology is deposit to centralized exchanges. And here in particular, we need to be aware of the exchanges that have limited KYC or no KYC at all. DeFi is another popular method used in money laundering. And then mixers, of course, but mixers, we are seeing that although they're still present, criminals just like ourselves are aware of their bad reputation and the fact that they raise red flags. So cross-chain bridges or chain hopping, what is the rationale? Why are they used so much? So they create a technical small screen. It's even blockchain analytics companies need to do an extra need to go an extra mile to understand where crypto has ended up after a bridge, and especially it's the risk for compliance teams within exchanges. So they do create a technical small screen. And the biggest problem actually is that it's hard to differentiate between the legitimate use of cross-chain bridges and illegitimate one. Legitimate uses, of course, do exist, and they relate to things like trading, things like converting funds to avoid larger fees. And it's hard for analysts to differentiate among those. And speaking from somebody who has worked on setting up scenarios and even for AI-based monitoring, we need to be very clever as to how we create those scenarios to differentiate between illegitimate and legitimate users. So I'd like to go through a case example that we have analyzed. It's a recent case. It's from September this year, just 2 months ago. A victim lost almost $1 million. It was a private key compromise via malicious fake Zoom installation package. And the laundering methods or main typologies that we're seeing in the laundering process are no KYC exchanges, DeFi protocols, extensive swaps, and cross-chain bridges use. So step one, we have numbered the steps for you so that it's clear. It happened on the 18th of September in the late evening, which in itself is an interesting pattern that could be incorporated into scenarios potentially. So the victim wallet was lost. All that amount, and you can see that staked Ethereum was transferred to the illicit actor's wallet, and then the gas fee payment enabling for further transactions was also transferred. So around 25 minutes later, after the initial transfer, the stolen crypto was transferred to the next wallet, presumably controlled by the illicit actor, and then was transferred again. So in about 51 minutes, the first no KYC vast deposit occurred, where one stake Ethereum, after one stake Ethereum was swapped via a decentralized exchange. So you can see 3 there. It's the swap via decentralized protocol, and then the money goes back, and then it's moved later, moved onwards. So what can we see here is that a part of stolen funds within under an hour reached a VASP, which was located in Seychelles, and it had limited KYC, almost no KYC in this case. So further laundering occurred later on. In the space of 7 days after the second step, almost all of the funds, 99%, were distributed across 2 main wallets. So in 3 or 5, you can see the distribution. And in 6, the swap transactions are initiated. It takes about 2 hours for the funds to be swapped by a decentralized protocol. So again, we see a decentralized protocol. No KYC again, and only a portion of the stake Ethereum was sent back to the sender, while most of the funds were transferred to an unhosted wallet in 7. After the swap transactions, it took only 4 minutes for the VASP, in this case, a decentralized exchange deposit to occur, and subsequent VASP deposits were made within 2 hours. So in total, over 500,000 USD equivalent was deposited to the same decentralized exchange deposit wallet. So this was one vector of the laundering. Another laundering vector occurred in much less time, within about 12 hours after the initial transaction. And we can see that a portion of funds was transferred to another wallet, and in 5 minutes, all funds were swapped again to Ethereum via DeFi protocol. You can see it in the right side of the slide, how the swap occurs, how the money goes back. So further steps. In 2 hours after the swapped Ethereum was received, the 96,000 equivalent in USD was transferred to the next wallet, swapped to the robbed Ethereum, and moved to a DeFi cross-chain protocol in 1 hour and 50 minutes. And very quickly after that, 3 minutes after the swap, almost 200,000 equivalent in USD was moved back to the illicit actor's wallet. So final stop, exchange deposit. And I have to be fair, the exchanges here, while we are not naming them, they are located in high-risk jurisdictions that have no regulation of crypto firms. And most of these exchanges are no KYC exchanges. So after the initial steps, almost 200,000 USD was transferred to another wallet in just 24 minutes. And later, a total amount of 42 Ethereum was distributed across 3 different centralized exchange wallets, partial KYC, in 1 hour and 30 minutes. So this is a full case diagram Granted, this is a relatively large amount, it's almost $1 million, but we are seeing similar patterns and similar typologies when the amounts are lower as well. And in this particular case, a number of wallets was created in advance, and it's just like in the Bybit hack. In the Bybit hack, for example, we saw that the scammers were very well prepared in advance. They set up the network of wallets in advance. In this case, it was not the situation all the time, but you can see the extent of effort that the scammers went through to launder the funds. And what it tells us as well, of course, is that they are very well aware of what we know, and the type of exchanges that they targeted, again, are those offering almost no KYC or no KYC at all. We see an extensive use of DeFi protocols, again, no KYC and very fast enabling of swaps and transfers out. And we see that somebody has been sitting there and working hard on the scheme to happen. So the key takeaways. The first VASP deposit occurred only 51 minutes after the hack, just under an hour. Extensive swaps and cross-chain transfers are followed by fast VASP deposit. What we can imagine there is that what a VASP sees on the receiving end is an incoming transfer from a cross-chain bridge. And then the question is, how does that VASP differentiate whether it's a legitimate transfer or not? Even in the case where the VASP is highly regulated, has very strong internal controls and transaction monitoring scenarios, even in this case, it's still very hard to differentiate between a legitimate transfer and a malicious one. So in laundering vector number 2, almost 300,000 USD was laundered in only 14 hours and 50 minutes. Coming from a traditional finance background where transactions are settled on an N+1 basis, N+2 basis, where numerous banks have to review alerts, and even without an alert being escalated, the settlement itself takes a lot of time. It gives us an idea how crypto can enable the speed and laundering. So the incident was publicly reported 7 days after the first malicious transaction, long after the funds were removed and dissipated, but before the last deposits. So in theory, the last VASPs in the laundering chain did have an opportunity to catch the incoming malicious transactions, but unfortunately it didn't happen. So what I would like us to walk away from this short session is that we need to understand that it's not only the complexity, it's not only the fact that we need to be empowered by robust technological tools, but it's also the speed in itself that's becoming a weapon. Criminals are preparing well in advance. The laundering is very fast, even if they do not set up unhosted wallets and the strategy to launder funds ahead of the scam itself. Even in that case, fast laundering of crypto is still very easy, unfortunately. This community works very hard on promoting crypto regulation globally, and a number of global exchanges have implemented very strong controls. We're seeing that those are used less and less for this type of schemes. So the idea is to push the criminal activity into a corner, where that corner of countries which have very limited crypto regulation or no regulation at all becomes smaller and smaller, and the opportunities cease to exist. So we also know that centralized exchanges remain the prime target, both highly regulated ones like Bybit, for example, and unregulated ones as single points of failure. We know that cross-chain movement is the new blind spot, so we need to think as a community, how do we differentiate between illegitimate and legitimate use of this technology? And some of the solutions suggested, but of course there are many more, and there are many creative ways how we can tackle it, including by using AI. So real-time tech-driven intelligence sharing, there are some very good examples of regulators implementing it locally, like in the UAE, for example. But we need to think how we can work cross-border, and of course Interpol has a number of solutions to that. We need to think how we can use modern, latest technology to enable fast intelligence sharing. It's possible, but we need to make it happen. Automated real-time alerts, they need to be fast. So it's one thing to incorporate those risk factors, the fact that a scam was, for example, a scam was reported in various platforms and then incorporated into blockchain intelligence tools like ours, for example. But it's yet another thing to set up alerts that differentiate between illegitimate and legitimate use. And again, we recommend AI in that case. Risk-based enabled controls and supervision. We all operate in a situation where resources are limited, time is limited, human capacity is limited. So we need to understand what are the cases where we need to move fast and actually do so. Thank you so much.